Forex trading sessions. The global foreign exchange market is open for business around the clock 5 days a week, and this is the main attraction to Forex trading for most new traders, as you can spot opportunities throughout the week at any point. Okay, so the Forex market can be split into 4 main trading sessions: the Sydney session, the Tokyo trading session, the London trading session, and the New York trading session, but only 3 of them are really important for us anyway. The peak trading sessions, and they are the Tokyo session, the London trading session, and the New York trading session. These are the most important trading hours: the Sydney session, the Tokyo session, the London session, and the New York session. And the British Standard Time goes as follows: for the Sydney Open is 10 p.m, for the Sydney Close is 7 a.m, for the Tokyo Open is 1 a.m, Tokyo Close is 10 a.m, London Open is 8 a.m, London Close is 4 p.m, New York Open is 1 p.m, New York Close is 10 p.m. And if you look closely at the hours, you can see that there is some overlap between the London and New York session, and there's some overlap between the Tokyo and London session. There's also an overlap between the Sydney and Tokyo session, but this isn't really important for what we are trying to understand here. The best time to trade the Forex market is during the London trading hours, and that's because the big banks, the real global market players, are most active and doing business during this time of the day. I prefer trading at roughly 2 to 3 British Standard Time, and that's simply because it's the most liquid time of the day, and so the market is often very volatile around this time, and subsequently there is an abundance of opportunities to profit from. As an important note, the pound crosses will usually be the most active during the regular London trading hours, as although they are always active, they're more actively traded during the hours when the UK market is open, so from 8 a.m. to 4 p.m. And the reason is very simple. It's simply because that there's more economic data relevant and impactful for the pound during this time. And so this is a similar phenomenon that occurs for the Australian dollar, the Japanese yen, and the US dollar, as more data that's more impactful to these currencies are released during their respective countries' trading hours. Let's look at the 2 overlaps. The first one, the Tokyo session to the London session, there isn't much liquidity, and that's because there typically isn't much movement during the Asian session, and it is quite early for European traders, so the market will often remain flat for quite a while. The period of time on this chart with the most liquidity is right here, and that's simply because it's the London to the New York sessions overlap. And so often what you see at the end of a session, the European session particularly, is that European traders may be closing their positions, and it could cause very choppy moves right before the US heads into lunchtime. During this overlap, US traders could continue trends set in the European session, or they could simply reverse them. The worst time to trade is on a Sunday when there is little to no liquidity, and so the markets remain flat, and Friday when liquidity is dropping and the market is not moving much. I'd also advise not trading after news reports for new traders, as you would often lose large amounts of money before you know what you're doing. I would say trade Tuesday, Wednesday, and Thursday as liquidity is higher, and when liquidity is higher, volatility is higher, but there's also more market opportunities. I would also say trade during the European or London session, depending on what you want to call it, as well as the crossover between the New York to the London session. Thank you for watching. Like, share, and subscribe for more content like this. Drop a comment down below if you have any questions. And remember, Sometimes we're tested not to show our weaknesses, but to discover our strengths.